What is an investment? In financial parlance, it is something you buy today in the hope that it will be worth more tomorrow. These things are called assets. Why do we invest? In a simple word, inflation. It can work with or against you. So we all know that the prices of all things rise over time. Something which cost $300 in 1980 would cost me around $950 today. And that is a problem because it means that what you save today is not going to be enough for tomorrow. So investments are a hedge against this inevitable phenomena. As prices rise, you can assume that the value of your investments will rise too, so that if in the event you have to sell or generate income from your investments tomorrow, you will have it at par with what prices are then. And we know you're asking, quick, tell me where to get these investments. So today we will discuss the following: a retirement fund, stocks or shares, and real estate. We will also learn about investing in others, which may be one of the best investment decisions you'll ever make. As a young person who is just beginning to have a semblance of a career, one of the easiest ways you can invest is through a pension fund. Most of the time, you don't even have to actively do it because your employer deducts the money at source to put it in your retirement fund. Let's hear it from Thimphu, who will now tell you about how retirement funds work in Bhutan.
Established on March 30, 2000, as an autonomous agency, the National Pension and Provident Fund, or in short NPPF, manages the pension and provident fund schemes of civil servants, state-owned corporations, and armed forces. The pension fund allows an individual to save a certain portion of their income for their retirement. These funds will later offer a regular source of income after one retires. Right, so a retiree receives their fund until their demise. In Bhutan, you would have to contribute for at least 10 years in order to qualify for pension. However, it's a little different with Provident Fund. So the Provident Fund is very similar to pension fund. However, a Provident Fund is a one-time lump sum payment that you get when an employee retires, whereas a pension fund can be both monthly as well as a lump sum payment. In Bhutan, Provident Fund is paid in lump sum, which is accumulated contribution and rate of return. So the rate of return is declared and credited to each individual account based on the investment performance. So whenever you provide funds or you save up for the Provident Fund, the accumulated fund in NPPF is invested in various assets by NPPF so that they don't just keep your money and store it, right? But rather they would want to make profits and give you even more money than what you're investing. Currently, NPPF invests in various assets like equities, loans, bonds, deposit with banks, and real estate. In our research, according to NPPF website, due to very limited number of investment avenue in our local market, loans to members and corporate bodies form one of the major investment avenues for NPPF. By default, all government agencies are registered members of the NPPF. Civil servants and armed force personnel on regular employment actually enjoy simultaneous membership in both the pension and the Provident Fund schemes. So employees of certain government corporations, joint sector companies, national and international non-governmental agency NGOs, they are also members of both the pension fund and the Provident Fund. However, contract employees such as myself, we are only the members of the Provident Fund scheme. So I'm sure most of our listeners have heard this as well, but recently NPPF was in the news as it is facing a major sustainability risk. According to the Bhutanese, our local newspaper, I quote, "The current rate with no changes, the civil service part of the pension could run until 2060, after which it'll be at a loss, as there will be more pensioners than those contributing." So basically, after 2060, there'll be more people actually getting money from NPPF than contributing or giving to NPPF. There are several factors affecting sustainability, but we'll look at two major ones. So factor number one, one of the major factors, which is actually quite common all around the world with pension schemes, is the increase in life expectancy. An increase in life expectancy without an increase in retirement age, which is what's happening in Bhutan currently, means that NPPF has to provide pension for a longer time than what is sustainable. Factor number 2, the current formula that is used to calculate the pension is based on the basic pay of the last year you work. This means that a person contributes much less to the fund in the years before that, but based on the calculation of your last year in job, you'll actually end up getting much more than what you actually pay. So what does NgulDumb think about all this? For NPPF, its sustainability is very vital. Like, I'm sure all of you listeners know this as well. Our current generation pays to support the earlier generation, knowing that they will be in turn supported by the future generation. What could help NPPF in its sustainability is the inclusion of more people in the fund, by which we mean a pension model for the private sector that is very similar to current public sector members that are included in NPPF. In this model, there'll be stronger regulation as well as behavioral incentive, such as automatically being included in the pension fund for individuals working in private sector, right? So making it kind of similar to what our civil servants are, the policies that are around civil service. And obviously more contributing members means an increase in the investment pool. So for you listeners, for our listeners right now, if you're currently in public sector, you don't have to worry. You don't have to do anything separate to create the fund. It's already there for you. But do call up NPPF and understand how it works and possibly how much you'll be getting after your retirement. If you're not part of the public service, remember that you can still create a provident fund. So if you don't have that, get started. And if you're lucky enough to still have some spare cash at the end of the month, it's also a good idea to actually look at alternative investment avenues.
The next place you can invest is the stock market. Jigme shares what the stock market is and how you can get into it.
Hi guys, I just want to caveat by saying that we are not experts and shouldn't take our content as investment advice. Now moving forward, what is the stock market? The stock market is basically a market where buyers and sellers come together to buy and sell goods. So basically you have traders and stockbrokers who come to the stock exchange and buy and sell shares of companies. That is basically the simplest form of the stock market. Before we get further into that, we also want to talk about bonds, which are also traded on the exchange. Bonds are debt instruments issued by companies to raise money. They offer a fixed amount per year for a certain period of time, and then you get back your invested money when it matures. So moving forward, stocks, also known as equities or shares, are fractional ownership in a company. Stock owners own literal pieces of a company, and the stock market is a place where investors can buy and sell ownership of such assets. Companies sell stocks because it helps them quickly raise capital or money from the public, which helps the company grow. In return, stock owners get a certain percentage at the end of the year if the company ends up making a profit. Within the stock market itself, there are two types of market: primary and secondary. Primary basically being IPOs. An IPO is an initial public offering. An IPO refers to the process of offering shares of a private corporation to the public in a new stock issuance. The public share issuance allows a company to raise capital from public investors. That's basically you, me, maybe institutions like BOB or NPPF. And secondary is the buying and selling of stocks that have already been issued by a company. Typically, stocks are a riskier asset class because markets are very unpredictable. One day the value of your stocks are very high, and the very next day it could completely crash. So people can either make a lot of money selling stocks on the day it fetches a high price, or lose all their life savings on the day the stock loses all their value. Another example we could have is about GameStop, where the investors made a huge amount of money, where I believe there was 11,000% return over a short period of time. There are a lot of external factors regarding that, but that's an example of your stock value soaring a lot and you making a lot of return on that. Sounds a little bit scary, but it's not really. Hope our listeners are enjoying the content. Now we can talk about the most important bit, how to make money on the stock market. There are people who are called traders and they speculate on the rise and fall of stock prices and make stupendous amount of money, as I mentioned before about GameStop. But most of these traders are institutions themselves with enormous amount of resources. Thus, it will be harder for normal people to compete. This is much more true in the States and in countries that have more developed stock exchange and capital markets. But maybe this will happen as well in the future in Bhutan. But what we want to help our listeners focus is on the long-term gains that can be achieved by a few investment strategies that you can apply. There are countless methods professional investors overseas use to invest, but virtually all of them come down to two basic investment strategies: value investing or growth investing. What is value investing? Value investors typically invest in a well-established company that has a strong track record financially and provides regular dividend income. It is more focused on risk as compared to growth investing, and will invest in companies whose stock is undervalued. Example of how is basically one of the most famous value investors is Warren Buffett. He'll invest in stocks which he believes are undervalued to the share price that's offered on the stock exchange, and he makes these investments. But another factor is he also looks just not on the price of the share, but also on the company. Is this a company that's going to have a good long-term future where it will generate regular dividend income? So companies like Coca-Cola, companies like his insurance company in America, they're very strong companies that will generate income over a long period of time because there's a set market already. Now on the other side, we have growth investors. Growth investors seek out companies with great potential and hope to make their money by increasing the share value. These investors take a lot more risk. They're not concerned about dividends. They're mostly concerned about the share price growing in the long term. So examples of that can be Amazon. When from the first time it started till now, it has a massive increase in value, and I don't believe they've ever given out dividends. Also, another example of growth investing is when Peter Thiel invested $500,000 in 2004 for 10% of a company, and that company was Facebook. So 10% of Facebook today is a lot. So you can imagine the huge increase of your money, the multiple thousands of times, especially for Peter Thiel.
We thought we'd include a brief section on real estate since it is often a good investment avenue, if only it wasn't such a common investment advice. For many people, owning a land looks like a very attractive option because of its perceived high returns. Case in point, the Bhutanese, a local newspaper, reports that property prices, especially in places like Thimphu, remain high despite sluggish demand. On one hand, it's simple economics. Land, especially in an urban place like Thimphu, is becoming scarce. So the more scarce it is, higher its prices. But on the other hand, it could also be because sellers expect a much higher return on sale than people are actually willing or could even afford to pay, which is going to be a problem for the person who is trying to sell their land. Since you, our listener, are probably young, as in that you may not have enough money currently to be able to afford buying a piece of land, let alone build a house, you may be aiming for that, or your uncle or your parents may be telling you that this is what you should ultimately do. We are not saying that it's a bad idea. It certainly is a good idea to start thinking of saving and earning towards that goal, if that is what you really want. However, we would like to provide some caveats that you may want to consider. Number one, sometimes your life will be easier if you just lived in a rental. Seriously, you do not hear that enough, but consider this. For you to buy a piece of land and build a house on it, you may have to take out loans. Well, lucky you if you don't need to, but most often you may have to. And housing loans are not cheap, with interest as much as 13% per annum. Maintaining a property or a building is a lot of work. Pipes leak, toilet tanks get clogged, walls need to be repainted, renters can wreak havoc on your flat's interiors. As a landlord, you have to set aside some money constantly to fix all that. However, if you are still determined to own land and someday build a house despite all the aforementioned challenges, we have some suggestions for you. Consider buying in the outskirts of a popular place. It may be further from the city, but it will be cheaper. Research some places which may be the hottest location in the next 10 or 20 years. You could get lucky and buy cheap now and see the returns much later in the future. Basically, look in unlikely places and place a bet. So, investing, as we've discussed so far, is placing a bet, hopefully a well-considered one. And it is often that you place this bet on others. In the following sections, Pelmo will take us through angel investing and crowdsourcing. Considering the landscape in Bhutan currently, we do believe that this is one area where individual investors can have a lot of impact. It can be a decision that will not only change the lives of the people and the businesses you're investing in, but also a great investment for your own financial future.
Well, you must have heard or watched the show Shark Tank, right? It shows entrepreneurs making presentations of their wacky inventions and innovative ideas to a panel of 5 investors who decided whether to invest in their company. Congratulations, you just grasped the concept of angel investing and angel investors. An angel investor is a high net worth individual or someone who has excess money in their hand to provide financial backing for small startups or entrepreneurs, typically in exchange for a certain percentage of ownership in the company. On the other hand, a startup is a young company founded by one or more entrepreneurs to develop a unique product or service and bring it to the market. Jab-chor was launched in Bhutan as an initiative of the Royal Monetary Authority of Bhutan that was conceptualized and influenced by angel investing. RMA has partnered with the Ministry of Economic Affairs, the Royal Securities Exchange of Bhutan, the Thimphu Tech Park Limited, and the Bhutan Chamber of Commerce and Industry to provide young entrepreneurs, particularly startups, who are faced with the challenges of early startup, equity and financing, despite having great business ideas, for them to connect with well-to-do individuals and private companies that have the capital to spare and expect an effective return on investment. The Jab-chor Ventures help investors enter into a financial partnership with a trustworthy entrepreneur who will give meaning to their investment and function within a legally defined relation to help them earn dividends, both in cash and goodwill. So, if you are an individual with capital to spare to invest in startup ventures for lucrative return on investment, then Jab-chor is Bhutan's only, as of yet, authentic angel investing platform for you to invest. Obviously, like any investments, there are risks, but then on the hindsight, as an angel investor, you will have a say in how the business runs and will also receive a portion of the profits when the business is sold, but they mainly focus on helping the startups take their first steps rather than the possible profit from the business.
My name is Thimphu and I'm an angel investor. I invested in a startup called Kingdom Essences, which makes well-being products from natural ingredients that are sustainably sourced from our forest through community forestry groups and farmer groups. Why I decided to be an angel investor? Well, there are several reasons, but if I may, let me articulate three main ones. Empathy and paying it forward. I've been an entrepreneur founder for most of my life, from starting non-profit to for-profit entities. I have the lived experiences of an entrepreneurial journey, the passion, the joy, the sweat, and the stress. Back in the early years here in Bhutan, we did not have that ecosystem enablers like angel or impact investors, let alone mentors and other related capacity network. I was lucky to engage with several global platforms and communities that provided that for me and exposed me to that whole sector of entrepreneur ecosystem. So now, after a little over a decade, I wanted to replicate and pay it forward and provide a slice and hopefully beginning of such enabling environment and tools for our entrepreneurs here in Bhutan. The second, recognizing innovation, talent, and adding value. People say, our youth is our future, the private sector, the driver of our economy. All these are nice slogans, but unless we put words to action, it just remains that, a slogan. It is unfair of the society to put such huge responsibility on groups of people and sector if we do not work with, collaborate, and tread the journey together with them. Our country can add value and wealth through innovation and entrepreneurship, which essentially is talent, hard work, and discipline. And the least we can do is help catalyze them. So it is nation building. Third, taking a leap of faith. It is not necessarily a guaranteed return on investment. Like everything in life, there is risk, and we all have our own appetite and accepted level of risk. In the investment culture in Bhutan, especially angel investing, impact investing, or venture fund, is very new to non-existent. But it is a much needed service, especially if we really want to strengthen and grow as a progressive, entrepreneurial, and resilient economy. Actually, that's one of my goals and why I'm working to establish an impact fund, which is taking much longer than I had hoped for due to structural and regulatory lag and barriers. But I could not sit back and let the system be an excuse. As entrepreneurs would agree, we find ways to innovate. If the system does not allow it, we adapt and make it work for us. So while the Impact Venture Fund is still not an entity, I went ahead as an angel investor. You have to put your skin in the game. If you want to bring change and establish confidence of the society at large, you have to show and tell. As for opportunities for angel investing in Bhutan, there are plenty because very little is done in this space. As a sector, there are many systemic work to be done, but unless we do it, it'll never get done. Our Bhutanese society today, there are enough savings and people who can afford to invest in our entrepreneurs. But people do not feel confident. I understand the reservation. To those, I'd suggest start small, pick an entrepreneur or a company with whom your values align and you have confidence in, and then take the leap. This too is one of the reasons why I'm keen on starting the Impact Venture Fund, to be the intermediary and manage and channel people's wealth into investments in our entrepreneurs and enterprises. Angel or impact investment is not only about money, it is about capacity building, mentoring, and network expansion with the aim to help grow the companies you have invested in.
Raise your hands if you have ever made donations to people in need over Facebook, a lot of which were amplified by famous journalists or through active Bhutanese groups on Facebook. This is a very common form of crowdfunding that's been happening in Bhutan. Crowdfunding is the practice of funding a project or venture by raising small amount of money from a large number of people, typically via the internet. It is also a form of crowdsourcing and alternative finance. Bhutan crowdfunding is the first digital platform developed by the Royal Securities Exchange of Bhutan. It aims to provide an alternative financing model for startups, new business ventures, and cottage and small industries in Bhutan to access funds from the general public. The platform offers entrepreneurs the opportunity to raise funds for their new businesses and at the same time provides new investment avenues for the public. You can either invest for equity crowdfunding in startup companies or donate in their Impact Bhutan flagship program. 3 companies, Bhutan Alternatives, Himalayan Food, and One Click Shop, have successfully completed financing their company. You don't need huge capital to invest in these campaigns. Minimum investment amount is NgulDumb 10. Yes, you heard it right. It's NgulDumb 10. As an investor, the crowdfunding model minimizes the risk of losing investments for all partners, and it provides a platform to receive public comments, feedback, and criticism to refine and validate the startup and business ideas in operation. RSEBL filters out companies who have valid business proposals, working prototypes, and are screened through RSEBL's Bhutan Crowdfunding Committee, which gives investors an added credibility to invest in this platform. Impact Bhutan is a donation and reward-based crowdfunding with the focus on making finance accessible to social entrepreneurs, projects, charities, and other activities as deemed fit by the platform, which will have a positive impact on the community and the country as a whole. It is similar to GoFundMe, an American for-profit crowdfunding platform that allows people to raise money for events ranging from life events such as celebrations and graduations to challenging circumstances like accidents and illnesses. There are currently 2 active Impact Bhutan campaigns that are Beat Up Empower Scholarships and Climate Force Antarctic Expedition in 2021, and 1 successfully completed campaign by the Ability Bhutan Society. Well, as mentioned above, angel investing and crowdfunding is a modern approach to investing in Bhutan, which makes it not just accessible but also mitigates risk for the investors as these companies and startups get screened and mentored by the regulatory institutions like the RMA, RSEBL, BCCI, Thimphu Tech Park, and MOE, while also providing them to grow in the market.
Before we end the show, we would like to drop a disclaimer that none of us are financial advisors or professionals. The content of this episode is meant to be purely educational. We would very much encourage you to go out there and educate yourself further. If you enjoyed listening to this episode, please drop us your comments, like this episode, and share it with your friends. This episode of NgulDumb is brought to you by Global Sheep's Thimphu Hub.